All right, folks, it is that time of the week. It's a weekend market update. So it's Sunday, July 27th, and we are going to be doing a few things on the agenda today. I'm going to actually start out with the chart that I'm presenting here. It's a monthly chart of IWM denominated in money supply. Then I'm going to look at IWM specifically. Then we're going to look at Bitcoin. Then we're going to look at USDT. Reminder, I'm not a financial advisor for those of you that have been following me here for a while. I'm just here to kind of give you a different perspective and justification for that perspective. I could be right, I could be wrong. Things I talk about could go every which way, right? Up, down, sideways. So just use this as a way to educate you on maybe a different perspective. All right, so with that, let's dive into it. One of my subs asked me to chart this, okay? And I'm glad he did because I'd been charting SPX denominated in M2, and there's a lot of signal in that chart. I'm not going to pull that one up today. There's equally as much signal in this chart when you look at the small cap index, and this is a monthly chart. This is denominated in money supply. And why I think a lot of people are going to mess a lot of things up that are actively trying to trade in and out of these markets at this phase in the market. And why do I continuously say that? Because this is a phase that's fairly unprecedented in our investing lifetime. Unless you were investing pre 20 or 2000 in 1996, 1997 timeframe. And so this is another chart that makes a case for that claim that I'm making. And if we're simply looking at, I'm not going to get into a lot of details on how I construct charts. Did some of that in the members video this weekend. All I'm going to say is this. When looking at major drops, right? Major drops in C waves. I mean, this is an A, B, C, right? Three-wave move. First leg is sharp, second leg is overlapping, occurs in a cloud region, occurs against the 30 simple month moving average textbook where you would see a B. And what follows after a B, right? A, B, C, the sharp leg, the sharp leg, the sharp leg. Okay. So what I'm interested in looking at, and this is the great financial crisis, by the way, this candle, this B wave back into this region, which started this final C into the great financial crisis, started with a bearish order block. Okay, so there was a block of cells, in essence, in this index that started this entire process. Where was that? That was in that candle right there. Okay, November 2007. And so this block was so aggressive such that this wick back up into it, that was supply. There was a lot of supply there and people sold. And that's really the springboard, if you will. The spring, it's an upthrust, but I use the word spring more often to talk about the bottom of a Wyckoff, right? Range, spring, and then you get a move in the opposite direction. Upthrust is the same concept, but in a distribution where it's the spring on the top end of the range and sends it down. This, in essence, was that move that shot it all the way down. Okay, that's the gist of what I'm getting at there. Why that's important is let's go all the way across from that major point in the market, that block, right? And keep going 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 and keep going. And where are we now? Oh, look at this. Look at this wick. Look at this wick. Look at this action into April, right? This major move down in April. We got a wick. It got bought up in this, what I'm now calling a demand zone, right? Which was the great financial crisis bearish block. Now I've got it labeled here, kind of funny, the roaring 20s demand zone. Not that this has anything to do with the 20s. What I'm saying is that the implication is that this is the type of thing you would expect to see towards the end of a macro reaccumulation range, okay? And this, in essence, is a massive range since the great financial crisis. And so the market not only wicked all the way into that zone, it sprung out of it. And so my claim here is that this is starting to do something that we've never seen before in our investing careers. And the target is way higher. Okay, this is a type of move that gets things out of major ranges in my experience. Doesn't matter what kind of chart we're looking at, a monthly, a hourly, whatever. You see that type of move, you see an order block that was respected that sent the market down, you see it get tested like it did and bought back up, and you pay attention, okay? And you pay attention. The difference, check out the difference in so Kush, why didn't this happen the last two times? Let's explore it. Why didn't this happen the last two times? You're saying this demand zone is important. Well, actually, that's exactly what this is showing us. What happened back in COVID, March 2020? We major candle through the demand zone. How many wicks? 1, 2, 3, 4, 5 wicks under it. Okay. And then it came through, got into the cloud, all the way back up to the top of a range, and then back down below it. 1, 2, 3, 4, 5, 6, 7 months consolidating below it. 1, 2, 3, 4, 5 months of rejecting on the 30-month SMA. And so making a higher low, last point of support here, 1 month, same month, reclaim the 30 the next month. This is much different than this and this, okay? So this demand zone was important. The 30 was important. The cloud was important. And it all basically was one major deviation. And now it's a snapback in the opposite direction. Basically, what is it? It's the dip before the rip, right? You ever hear that term? That's what that is, in my opinion. And so why I start off with this chart is because what? Where has Bitcoin been where was Bitcoin invented? Here. Okay. Where has Bitcoin basically been thriving? Right? Here. Okay. Has Bitcoin ever lived in a financial era that potentially involves this move? You see where I'm going here? And so the market's set up such that Bitcoin has never been in a monetary environment that I'm basically trying to illustrate with this IWM denominated in M2 chart, okay? It's never lived in this type of expansive phase. Meanwhile, the targets are low. Not a lot of big accounts are posting. Big accounts right now should be posting 300, 400, 500, 600, 700, $1 million price target charts. Where are they? Where are the, I mean, I just don't see them. You see a few, but you're not seeing the dominant onslaught of bullish charts. And Bitcoin's in price discovery. By definition, it's in price discovery as we speak. So that's what I wanted to do there. So that's good. That's a good start. IWM on the weekly chart. What have I been saying for weeks, folks? I've been saying I do not expect any meaningful test of this 30-week moving average. We're making technical progress every week. I can see us going, accumulating within a 2, 3, 4, 5 point range. And here we go. Last week, our first close out of the cloud. Since we went into the cloud in March. So March, April, May, June, July. So 4 months. So the thesis of this V, right, is playing out quite well. Now, at some point, I can see us correcting, but I just see it coming from higher, right? You see this consolidating price action, that would indicate something like that's coming for us up here. I just think it comes from higher. I think it comes maybe late August, something like that. And it's a couple weeks, but then we just keep moving. And so again, I get it, the breadth, all that stuff. There's a lot of conflicting signals out there and on both sides. But again, I'm expecting the path of least resistance to continue to be up and then a correction to come when the least are expecting it. And people are expecting a correction here because things are extended. So again, indicators aren't going to work well. Indicators are going to suck, actually. High time frame indicators are going to suck. If we get this move, which is what I'm forecasting, forget your indicators. Everything's going to look bearish. You're going to get bearish divs on everything all the way up, and they're just going to get broken, and then you're going to get more bearish divs, okay? And it's just going to stair step. Things are just going to look not going to look great on the way up because indicators are lagging, and your indicators aren't taking into account this chart. Throw this chart formula into your indicator. Has your indicator ever lived in that environment? No. If you really want to go study indicators, go check out, I did a video on this, I think, a few weeks ago. Indicators during the dot-com moves, 1996 to 2000, and how many false signals. There were more false signals. In fact, the bearish indicators turned out to be bullish more than they did bearish. There you go. The more you know. All right, next, Bitcoin. Now, this is the BLX chart, which means it's not updated, which means the price today right now is not 117,978. Price right now is 118,412. I'll make this video. It's 10 o'clock in the morning. Okay, so I just presented all that, and I'm presenting Bitcoin chart third. Why? Because, again, the data objectively tells us that there are two possibilities. Well, there's multiple possibilities. This is my opinion. This isn't a fact. Again, in my mind, there's two things we can extrapolate from Bitcoin's previous consolidated periods, and here's what they are. Bitcoin's first major consolidation back in 2011 lasted 560 days in the form of an ABC, bottom left of the chart here. We then made our way all the way back up. So this is a reaccumulation. Okay, reaccumulation. We broke out. Okay, broke out. That's A. And it was the length of the bottom, proportionate to bottom to the top of the reaccumulation. We broke out, we consolidated. It then had another breakout, the length of the breakout to the first consolidation, B. Okay, so two major breakouts after reaccumulation was complete. Next, we move to the second period of massive reaccumulation. That was 980 days in December 2013 through August 2016 in the form of an A, B, C. The length of the bottom to the top of the accumulation, proportionate move, we saw Bitcoin move up and out and consolidate here for several weeks. The length of that move, if we extrapolate that impulse forward, we exceeded it in 2017, B. So we have an A move, we have a B move, we have an A move, we have a B move. They're proportionate to the move of the reaccumulation. And then, so far, proportionate to the move from the reaccumulation to the first consolidation and carried forward. 202, still not enough. An N of 2 is not enough. Not enough for anything. Third, we had A, B, C, reaccumulation, length of the reaccumulation in terms of proportionate, bottom to top, was exceeded in the form of A. There was no B, okay? This was not replicated, that impulse, and it just consolidated into a B wave. So now we have 2 out of 3 instances, 3 out of 3 instances where the proportion from the bottom to the top of the reaccumulation was matched. 2 out of 3, we had a second move where the move coming out of that bottom to top matching was then matched or exceeded. Follow me? All right. So now where are we? We're here. A, B, C, largest reaccumulation in the history of the asset class at 1,232 days. The bottom to the top gets us to 302K. If only we get an A, okay? If we get a B, and this is the most conservative B move, so I'm taking the most conservative. This was matching, this was slightly less, this is less and less and less. A very conservative second move from this consolidation gets us to 581. That's it. Is it going to happen? Nobody thinks so. Next. USDT. The monthly chart is one of the most bullish charts you'll ever see in the crypto ecosystem since its inception, actually, where we are right now. I think I reviewed this on a video a week or 2 weeks ago. And so we have a cloud, and it's turned red for the first time in the inception of this chart on the monthly. You've got a lower high, a lower high. Basically, it's just like water dropping off of a cliff, right? Or a ball, right? A ball dropping off a cliff, right? And then, oh my God, look at these things just sputtering away, and it gets weaker and weaker and weaker. And the energy gets weaker and weaker and weaker until it just slows down to a crawl. Okay? We're like somewhere here, and that's expressed also in RSI. I'm pulling up RSI. Look at this RSI. RSI since the inception on a monthly chart, right? Just going down, going down, going down, going down. And now we've been consolidating handle, right? This is basically inverted cup and handle, or the right side of the cup. Consolidating, consolidating, consolidating. My claim is this falls out. This is a breakout, inverted breakout on a cup and handle, and RSI just continues to go down. Let me get rid of that. Come back to this chart and note again, like I did last week, not only do we have alignment with a cloud, we've got alignment with the 30-month, we have alignment with the slope, the opposite of what we saw in 2021. And so that's it, folks. I think that's the end of the video. Did I have anything else I want to review? No, that was it. I hope you all have a great rest of the weekend. Look forward to sharing some more updates next weekend. Take care.